Hey, how's it going, dear traders, dear ladies and gentlemen? Welcome. It's a wonderful Monday, beginning of the new trading week. How is everyone doing, and how are your successes? Do you have any interesting stories to share that you would like to share with your fellow colleagues, fellow traders? I will be very happy to hear from you. So feel free to share all your ideas, thoughts, and comments. And of course, the more comments, the more interesting information you have to share, the more productive, the more fruitful our today's trading session is going to be. So, hello. What is going on in your life? So, while you are preparing your questions, I will talk a little bit about what we have on the platform. A little update, I think many of you have noticed already, because basically it's almost nearly, I would say like it's quite impossible to not see this and to for this news to go unattended or unnoticed. So basically we have the stocks mode back on track. It's back on track. It is back to our trading platform, and now you can once again invest into stocks. So, for example, into stocks. Now, with a little difference here. So before you could have the so-called fractional shares, like you could buy $1 worth of eBay stock or something like that. Like basically you had like 0.01 or 0.02. So basically 1% of one share, which would be something around like 4 cents or 4.5 cents or something like that. Now, all these stocks are back, and now you can only buy full shares. You cannot buy, say, half of a share or 1/3 of a share or 0.1%, 1/10 of a share. So the minimum one you can buy is basically one share. And if you wanna start trading this mode of trading, you need to invest like at least $45, which is the cheapest stock that we have available, which are eBay shares. Then we have Cisco, we have Coca-Cola, we have Disney, we have MS, Morgan Stanley, Alibaba, and everything else is pretty much above the $100 mark. And you can buy some Apple stock, which is trading close to 200. Now, stock price trading or stocks mode basically means that you don't really have any leverage and you can only buy, so you cannot short sell these stocks. Unlike when it comes to Forex, you can actually trade in both ways. You can pretty much say trade in the upwards direction, or you can trade in the downwards direction. So if you feel like Apple stock is overbought and it has come too close to the $200 mark, so in this case you can pretty much easily open like a down trade. So for example, on the MACD indicator, we can now observe that despite this stock being uptrending, basically the MACD is telling us that, hey, maybe we are too high already, and maybe there is we need some time to cool off. So that's pretty much the story about this. So Apple almost at $200 per share, which is probably the most expensive company in the world now again. So Apple is like, I know, it's like those, when you think about those movies that sort of picture our future, say in 2050, 2070, when we don't have governments, but we have these major corporations. So probably those sci-fi movies are at some point of time would be coming true, because basically Apple has more money than probably some 20 or 30 countries combined. Like Apple has more money. I'm not even talking about like small companies, small countries, but I'm talking about like Apple has more money than a few European companies combined. So it's just crazy that one company has more money and has more fun and actually basically also more power, which is also quite an important thing. Oh, wow. I heard the sign. So a few seconds ago, my trade closed with a $250 profit on Brent. So that's why I'm not really afraid of these. Yes, I sometimes do have losses. Losses are part of the game. But when you trade Forex, basically you have this, your best weapon, your strongest weapon against the market and against losses is knowing the risk to reward ratio. So when you know, when you are aware of this risk to reward ratio, you know that like even if you have losing trades, it doesn't really matter as long as you have profitable trades. And from those profitable trades, if you have at least 30% profitable trades, and if from those profitable trades you can get a much nicer ratio, so plus 250, or like basically this profit equals five losses or five stop losses. So I'm basically covering one. Yeah, and Brent is now trading at 85. Okay, so what shall I do in this case? Right, of course, I should move my stop loss here closer, and I will bring this one closer. And now I'm kind of thinking, okay, so I have this take profit here, which is right at the right where the major level of resistance is. I can clearly see that 87.5 is a strong resistance level here. So right, and this one I can move even further. I can be a little bit more greedy. Why not? So right. So this is called positions management. So so I already have these trades opened, and I'm now just kind of fixing the my risk reward ratio. I'm adjusting it. Cool. So that's a little bit that's my small little introduction in regards to Brent. Now crypto trades, well, they are like on the one hand I want to say that, oh yeah, like nothing is happening there, but in general, yeah, I would say it's kind of a slow, except we had in the past month we had so Ripple was like a major, like boom, just all of a sudden in a few hours it goes up by 60%, something like that. So that could have been a huge winner. And Bitcoin Cash, which went from 100 and now it's trading at 250. So if you take into consideration the 10 multiplier, it means that you could have profited, you could have gained like say one, so that's like 25% times 10. That's like basically you could have like do the maths, plus 200 plus 2.5 thousand percent. So nice gains out there. So that means you could have multiplied your positions size or profit of 25 times. So that is why I suggest to really spend some time learning and figuring out how Forex works, because Forex is really that tool that can even with say as low as, well, probably 25%, 25%, not less. I don't think that you can be profitable on Forex with 20% profitable trades. And then I would say having less than 25% profitable trades on Forex, like you really need to try this. Okay, you really need to try doing this. Okay, in reality, it really is hard to actually like have as low as say less than 25% profitable trades. I just don't know how to achieve it. Like whenever I was trading Forex, I usually had more or less somewhere between 40 and 60% profitable trades. I wouldn't say I always had like close to like 80%. Maybe during certain days I was like maybe on the winning side of the market, and I would have like you know I would sometimes maybe have like, I don't know, like 80%, like 8 out of 10 profitable trades. So those were like the biggest days, the biggest, like the biggest wins. Okay, so I was making like tons of money. And I would say, yeah, sometimes I would have like less than 40% profitable trades. But once again, that like, just try serious Forex and don't just, close positions close your trades within 1 hour of opening. Okay, so if you're able to actually train yourself, to get yourself disciplined to the extent that you keep your positions for a few hours and then a few days, a few weeks, you're going to notice that you're going to notice what I'm talking about. So just to give you an idea, so 2 weeks I was sitting in this trade. Okay, I wasn't really in a hurry. I wasn't really trying to get to close this profit. Even, of course, you feel this temptation to close your trades once you see the first initial profits. Now that is the and then you have this urge to sort of take this money, because before you close the trade, before you press close this before you like press the close button, this money is not really in your account. It's kind of like a the so-called unrealized PNL, right? It can like double, it can triple, and then it can go back to zero, or it can go negative. So that's very important to always like be aware of this, and just, yeah, it's like that. Now I think Bitcoin Cash really has some, like, so we went from 100 to 300, 330. Now we are in the correction phase, and basically that's a very that's yeah, let's go ahead and open this trade, like 10 multiplier, right? Oh yeah, I think it's perfect, right? So I can maybe even put my right. So here would be my take profit. Okay, I think it's perfect. This previous high, and that's where my take profit is right now. So I place it there. I think that's the kind of like the best position right now, the best way. And another trade which I wanted to open is, of course, Ripple. So let's see where my, okay, I would say it's fine. So this is where my stop loss is, below all these shadows. So shadow 1, 2, 3. So, and as you can see, this shadow was here, this one here. So basically we have this uptrend kind of, and my take profit is once again here plus 240%. So not being too greedy, but here it is. And as you can see, this like, of course, previous performance does not guarantee that it will repeat in the future, but it gives you some hint whether this asset is, so there is this word expression, stocks in play or assets in play. Basically, it means that this asset or this stock is currently hot, and there are many people trading it, and many people sort of expecting it would go up or go down. Like, basically there is a lot of interest involved in this, and a lot of attention is drawn to this asset. All right, so let me go ahead and answer a few questions from our chat. So a person says, I'm Dominican and I don't know much English. So dear viewers, so we have webinars in Spanish and in, so I guess it's Spanish. We also have ones in Portuguese. So please search in YouTube, on YouTube, OLYMP TRADE para Brasileiros or OLYMP TRADE LATAM, and my colleagues, they conduct between 2 and 3 webinars, I would say almost every week. So you are going to find a lot of interesting information and a lot of useful advice. So, all right. The next question is this. Sir, I trade in GBP USD. Can you give me more knowledge about this? All right, let's have a thorough look at this asset and let's see what's happening here. So, the pound, right? So guys, fundamentally speaking, I cannot really tell you much about this. So it seems that the US economy is doing much better than the European economy, and the pound belongs to Europe, of course, because Great Britain is located in Europe, obviously. So how do we go from there? Now, there was a major problem with the British economy basically last year in October, when everyone thought that the pound was on the brink of collapse and that it would go below the parity level. And that also coincided with the euro devaluation, because the euro also went down significantly at that time. Nevertheless, the crisis was sort of overcome, and some of the major problems were fixed then, and now we are trading back again at close to the 130 level. So we dropped to 1.05, and now we are back to kind of like 130, and well, we can actually see further increase. Okay, so now we are kind of like back to status quo. And so where do we go next? So from the technical point of view, I'm going to tell you this. So on the technical side of things, I think we are, so we have entered this downwards phase. And I think the only thing that is supporting the pound now here, and this support might be over soon, so we start applying trend lines here. So trend line. All right, so as you can see now, the only thing that is supporting the pound is this trend line, and you can clearly see that we are, so there was this first initial attempt to break below this price, this support level, and now we are sort of back at it again. And so talking globally, yeah, and one more trend line, and you're going to notice that we are in this well-formed downwards channel, and we can expect the further drop towards this line, where we have a lot of support levels from the previous from the previous months, from the month of June. And yeah, so basically, yeah, that's I would say my view here is really bearish. So I think we can easily like open a few trades here. That's what I'm going to do. And of course, dear traders, a little disclaimer here that no analyst in the world is able to predict charts with 100% accuracy. So just be aware of this fact and do not blindly copy my trades. Do your own due diligence, analyze charts, analyze trades before actually opening them. Right? So I really ask you to do it, because yeah, because it's very important to do so. Now, what else are we going to talk about? So yes, the pound definitely, despite on the daily chart we are still kind of like uptrending, but now I think we are fighting for this level, for this support level, and I think this battle is almost lost for the pound, and the pound's value will be going downwards. And of course, a very like basic, like a rule of thumb, when you want to figure out which kind of or which phase we are currently in, you want to have a look at the number or in the size of candlesticks, and you're going to see that now red candlesticks prevail. So it's not so many green candlesticks anymore. It's more of red candlesticks. So basically, yes, you have red candlesticks prevailing. That is kind of like a very basic approach to trading. Of course, like I don't want to tell you like I'm an analyst with 10 years experience and I always look at simply just the color and the size of Japanese candlesticks, but that is an additional thing that can give you a little hint on what's going on with this. So, right. I hope I answered your question about the pound GBP. Now, tell us about trading without indicators, with resistance and breakdown, support, or well, yes, guys, this is a pretty big topic, and it all comes down to identifying these the so-called highs and lows, or local highs and local lows, like local minimums and maximums, like this one. And you just basically what you need to do is you need to train to connect them and to extend them into the future. So let's imagine I spotted this chart at this phase, and I would be like, okay, so I extend it into the future, and probably my strategy here, I would probably, if I were here then, I would probably open a downwards trade, because basically this is a level of resistance. So charts in general, to give you the overall idea about this concept and this approach, is basically it means that charts, they go from one area of support, from one comfortable area to the next, and then they take rest in between, right? The same way as we do like people, we take a walk and then we sit a little bit for about 10-15 minutes, and then we get up and walk again, and then we get tired and we need to have this accumulation phase. A very good example of this, let me show you, is of course Bitcoin. So basically, like we saw a lot of volatility. It was really volatile in late, well, I would say like since late 2020 and up until summer of 2022. So that's almost like what 1.5 years. No, 2.5 years. So for 2.5 years, it was very volatile, right? And then it basically stayed there for almost half a year. No, let's say like almost half a year, 6 months, maybe even more. It stayed here in this very narrow thin line without much interest. There were a few attempts to break out of this channel corridor, this price range, but they were not successful. And once enough momentum was gained, or once enough positions by big players were accumulated, and then only then Bitcoin pushed for this breakout. And there was this go up, make a correction, go up again, correction, and currently we are sitting here at 29.5 thousand, and probably I still kind of remain bullish on this asset in the long run. I think, I do think that we can really go up, and eventually we can break above the $60,000 mark. Like, of course, I cannot guarantee that, but I kind of see that it's not really like the first correction. We might see the first correction here, and then I think we can easily go to 40,000 and 60. And one more thing that everyone has to understand when you trade, when it comes to trading. So in 2020, Bitcoin went from I would say average of 5,000 and up to 60,000. So that's 12 times. Okay, so it increased by 12 times. Now, this time, if the price were to increase, to go up by 12 times, that would mean that the price can easily go to 300,000 and above. So when it comes to like relative and absolute change, these are two practically different things, right? And we have to pay a lot of attention to this relative performance versus absolute performance. And this absolute performance, like $1,000 would mean a lot in 2020, and in 2023 this 2,000 or 1,000 is nothing. It's like 3%, whereas here that would be 25%. Okay, so this the law of the law of compound percent. That is the word. That is the answer. Okay, let's continue. So, dear Arnav, this topic is quite big. Like I said, I cannot answer like much in detail, but just try watching some YouTube videos. There are tons of videos out there. Try talking to one of our analysts and just sort of start opening charts. Start with daily time frame, and then go to like 4 hours, 4 hours, 1 hour, and try to notice these areas of interest. Okay, so as you can see, we are currently here, and the nearest support level is here at somewhere at 28,000, and then you have this above that is this 31.5 thousand, something like this. Okay, so we are currently in this ascending triangle or ascending wedge, and that is a very good sign that it can really break above. All right, how can I find the resistance level and which time frame should we do it? So it depends on your, like I said, it depends on your investment preferences. So when you trade FTT mode, you want to be analyzing charts, of course, on 1 minute trades. Like you just go ahead and like start drawing these lines. Of course, we can see now 29,460 is a major resistance level currently for minutes, and this line here, 29,380, would act as a support level, and also this one. So just sort of try drawing these horizontal lines or these inclined levels or trend lines, and you're going by doing this probably 100 times, you will already learn how to draw them, and you will start noticing things that only you will be using in your trades. So it's not really a good idea to copy 100%, like say one and one, like exactly precisely all those levels of support and resistance, but in general, just learn the principle. So learn the principle, and then sort of yeah, and then just start opening different charts. I go from one chart to another, like say 1 minute, 5 minute time frame, Europe Composite Index, Dollar Index, and these levels they are everywhere. So I noticed two chart. Okay, so question from Alexander on crypto work technical analysis. Yes, pretty much technical analysis works everywhere, and I can now, for example, imagine I close this, I remove this label, the name of the asset, and no one's gonna like, you won't be able to say whether it's gold, and if I close this here, no one's will be able to tell whether it's some stock, some commodity, some composite index. Basically, the principle of the so-called fractals, that all market is fractal. It means that, to put it simple, it means that the laws of technical analysis, they work great with 1 minute charts, 10 minute charts, 15 minute charts, 1 hour charts, 4 hour charts, daily charts, and so on. So there is no need, there is no difference. And the only difference is the duration of trades. So of course, if you want to be, if you trade, okay, so guys, a perfect example here. Okay, let me go ahead and open a little trade, a small trade in the amount of $15, and as you can see, we are currently trading right at where the current resistance level is. So we are either going to observe a breakout from the first attempt, but more often we are going to see an attempt to break above this price, and then this correction, small correction, and the price going down. So this is how levels work. And there was another question from Michael basically about gold, and we are currently looking at gold. So guys, in general, as you can see, there are many news circulating in many outlets that some countries, like I would say many countries in the world, they are looking, so the central banks of many countries, those central banks are looking into buying gold because now, well, we have a lot of inflation going on in the world. So problem number one is inflation. Okay, so during the COVID pandemics, many countries, they just basically printed money to save their countries from the abyss of the financial collapse, and now the side effects sort of are kicking in because of so much inflation. Commodity prices and all other prices, they are going up. Prices going up, and many countries, many central banks, they sort of understand that in order to save or to store value of those money, they need to invest into something. So where do they invest in? Basically, you need to buy some real assets like gold, like metals, gold, and not fictional futures, but the real gold. And that's why many countries are moving this gold between different places. So you want to buy products, you want to buy, well, what else do you want to buy? You want to invest in real estate and many other things. So that is why gold is gaining popularity. And as you can see, just last year in October, gold was trading here at 1600, slightly above. Currently, we are trading close to 2000. And I think gold, if things just pretty much go bad, even if they go worse than now, so gold prices can go up to 3,000, 4,000. Of course, everyone will be screaming, wow, like all-time high, etc. But we are currently trading above the 2011 high when there was this speculation bubble. And from then, the prices went down. And yeah, so currently we are back to 2000. And I think now the question is, how do you want to invest? So I would say if you use the minimum possible multiplier like 5, you can easily stay on gold for a long time. You won't be kicked out of the position. Now, the only difference with leverage or multiplier is that oftentimes you choose it wrong, or there might be another problem. The market makes a move, like at first, even though eventually it will go up, but it might make this downwards move. You lose your position, it gets closed by a stop loss, and then it sort of goes up again, and you just basically stare at the chart, and you see that, oh wow, this is basically where my money is kind of like going away from me, and I'm not getting this money. That is a big danger. And the difficulty is to find the right moment, especially when it comes to Forex mode. So with FTT mode of trading, it doesn't really matter so much when you open a trade, because generally speaking, you have many trades to open. You open them daily. You open, like, say, tens and probably hundreds of trades per day, trying to get this little momentum, this little impulse on the market, and to have this, like, probably I would call it like scalping this way or this means of trading. When it comes to Forex trading, of course, on Forex, you will be, maintaining your positions for a long period of time. Okay, so that's a major difference. So, and to finish up, to sum up this talk about levels of support and resistance, now we see that gold broke above this previous high, which used to act as a resistance level. Now we're trading above this level, and we can easily go down towards 1900, 1967, like this one, and now this level acts as a support level. So what you want to do in this case, you want to place a pending order. Okay, what's the price? 67 and 1. Continue. Okay, so when you look at charts from the levels of support and resistance perspective, you always want to be using pending orders. So you don't really use them that much when you trade with indicators, by using indicators, but when you use these support levels and resistance levels, so they play support levels and pending orders, they play a much more important role in your trading in general. All right. I missed one question here. It's about FTT mode. All right. It goes like this. But on FTT mode, the risk is always more than the reward. What do I do in this case? Right. That's pretty much the basic observation about FTT, because my maximum gain equals 87%, but in case my forecast is wrong, I'm going to lose 100% or all my trade. Now, when it comes to FTT trading, it's a little different principle that should be taken into consideration. So when it comes to FTT mode of trading, it is very, very important to have more winning trades than losing trades. And I cannot really put this other than that. Now, of course, you can use the I'll say, the martingale principle, or the so-called loss compensation system. When you, in case of a losing trade, you sort of compensate with the next profitable, with the next trade, where you multiply, or you basically you multiply the trade amount by 2.2 times. But that can also be risky in case you have a very low number of profitable trades. So guys, my suggestion, my piece of advice here would be to really work on your profitable to losing trades ratio, and to try and get this ratio up to at least 55%. So 53% is the, I think is the bare minimum. So if you go here, we have history of trades analytics, and it basically shows that the baseline success rate when it comes to FTT is 55%. So it's very important to work on that number and to get your, so if you are able to consistently get 60% profitable trades out of 100, so it means that with fixed amount of money per trade, you will be closing your days in profits. If not, okay, so that's a little different, and you need to work on your strategy. So that is very important. So I would say on Forex, it's very important to know when to open a trade, and to always fight that urge to close your trades with just a little bit of profit, and to actually stay in the trade for a long period of time. With FTT, it's more important to have to work on your skill in terms of like really being able to make these short-term forecasts with and not expecting to have these huge wins from one trade, but it's just like bites and small chunks. Like get a few dollars here, a few dollars there, and then in the end of the day, you end up having, like, say, plus $50, plus $100, plus and more dollars in profits. So it's just these are two different principles and two different modes of trading. So guys, a question here: why your and my charts are showing difference? Why? I think the only difference is in the form of time frame. So currently I'm looking at gold with 1 minute time frame. It means that every Japanese candlestick here represents 1 minute of chart history. So 1 minute of chart history. And for example, if I switch to 5-minute trades, we are going to see now that every candlestick represents 5 minutes of history. So 1 minute, 5 minutes, it's all about kind of like representation. Now, if you want to check that everything works fine and that we have the same quotes, basically you need to click here, I, on the I in the circle, and you need to find, yeah, this quotes history, and you can always check that your assets, they always, like, you can compare it with a friend of yours with a different account, but basically, yes, we have the same quotes, the same charts, and it's just we can have an area chart, and it will of course look a little different because it shows a different segment or a different part of the chart history. Whoa, okay, dear traders, I think this is going to be it. Another little announcement here is that during August we don't plan on conducting these Monday webinars. So let me know in the comments section whether you want us to continue doing such webinars in September, back in September, or you just want me and my fellow colleagues to focus more on trading rather than market news and market analysis. So feel free to write it here in this chat, or feel free to write it in the comment section down below the chart window, the recording window on YouTube. What else do I want to mention? Well, I would like to wish you good luck in your trades, and so the key or the recipe to success is basically to always know what your strong sides and what your weak sides are. And by saying this, I mean you need to know what your winning strategy and what your losing strategies are. And work on improving your work in two areas. So work on the risk management and money management. So start being more efficient, effective there. And on the other hand, also work on your strategies and try to increase the number of profitable trades. So this ratio as well. So basically, the number of profitable trades and how much money you make from a profitable trade. All right. So okay. Thank you very much. And I will see you soon. Have a wonderful day and a wonderful trading week. Bye-bye.